Jim, I know that you are new into Abbvie here, or at least buying some more. That just got an outperform rating at Leerink from Market Perform.
Yeah, I'm a big fan of Abbvie. I've been in it for a while. If I may, I just want to talk about the sector first before I go into Abbvie, because I think I'm cautiously optimistic on it, but there are risks. Here's what the risk. The biggest risk is the government. All right, 2 years ago we had the Inflation Reduction Act that started drug price negotiation from the government on Medicare and Medicaid. That camel's nose is under the tent. They're going to be doing more and more of that. That on the margins is going to be negative for profits. In terms of managed care, you've got to worry about Medicare, Medicaid reimbursement rates. All that said, this sector is for the most part very cheap, and that's writ large in Abbvie, which trades at about 14 times next year's earnings, has about a 3% dividend yield. And much as I was saying, Courtney, with Cisco earlier, this is a great stock. It's had a great year. It's got a great trend, but it pulled back over the last couple of weeks because a drug candidate failed trials. And it's off about 15% since that happened. That's your opportunity. This is a very well-run company. The drug that failed was not going to contribute that much, and it wasn't going to be until 2030 that it was going to contribute at all. The reason the stock got knocked down was the perception that this drug, which came from an acquisition, was indicative that maybe management didn't know what they were doing. Management absolutely knows what they're doing, and you need look no further than how Humira has been replaced by Skyrizi and Rinvoq and other acquisitions that they've made. At this multiple, this is a great entry point, and that applies for much of healthcare right now. So I am optimistic with the caution that government is going to be a headwind going forward.
Kevin, that's an interesting point. Jonathan Krinsky talking about sort of the technical aspect of the pricing in the charts, saying healthcare looking timely, contrarian, oversold. What do you make of the space?
Yeah, I had the same opinion last year.
Okay. Well, timing is everything, right?
Maybe I was early.
Yeah, let's go with that.
So we own United Healthcare, which is a little bit stepped out of what Jim was talking about, although the potential headwinds for government intervention, especially with Medicaid and Medicare, are legit. But what they're taking in terms of market share is unbelievable. We've owned this stock for 12 years. I have complete confidence that it's an incredible name for us moving forward. We also own Amgen, which is a little biotech. I know you like biotech. We're going to hang in there with that. The other name we've been trimming and getting out of is Merck, more traditional pharmaceutical, 52-week low, down 25% over the past 6 months. Yes, it's trading at maybe 10, 11 times next year's earnings, but when you see a stock that's not performing, we've been writing calls against it, trying to get it called away, and it keeps going down. So it's a very small position, but we're not sharing the enthusiasm that we had for it last year.
Rob, you kind of kicked off the healthcare segment with your suggestion, so bring us home here.
He's got something up his sleeve. He's been sitting over there. He's been sitting over there grinning for 5 minutes, man.
Maybe he's feeling giddy.
What are you bringing out?
Are you feeling giddy about healthcare?
It's funny. I look at what we own. It's Lilly, Novo Nordisk in the GLP-1s, United Healthcare, Abbvie, Gilead, Vertex, Amgen, Regeneron. We have a lot.
You're in there. You are in the game.
We are in there, but we're neutral to space. And I think how we've played it is we have some of the secular themes in the GLP-1s and some of the stuff that's pretty exciting. And then we have a bunch of great companies with great pipelines that are really cheap that will be defensive carriers of the portfolio if we go into a year that maybe no one else expects. Right, and so the balance of those two things, I think, are great portfolio complements. And I'll leave it there.
Okay.